Hi everybody, welcome to our webinar on budgeting. So today we've decided to just focus on budgeting and go into real detail about it and then take any questions before we prepare a final webinar on forecasting next week. So I'll first pass over to Amy, who's going to talk you through why do we need a budget.
So what is a budget and why do we need it? A budget is a quantitative plan which is prepared for a specified period of time. This is typically one financial year. Budgeting serves a number of purposes, such as planning and control. Planning is essential for a business's survival, as it allows management to not rely on ad hoc results, and it also forces them to look into the future. Control is also very effective, as this is how a company monitors how it's doing. This is by comparing actual results to the budgeted results. Other benefits include communication within the firm, coordination, evaluation, motivation, authorization and delegation.
So moving on to how to create a budget in Syft. Once you go to the budget tab, you'll be given the option to either select a current budget or to create a new one. When you select new budget, this will be the first box that you see, or we're seeing on screen now. So you can name your budget here, select the period that you'd like it to cover, whether that be your financial year or your calendar year. You can then select the budget interval, which will be selected as either monthly or quarterly. In terms of pre-populating the budget, you can select whether you'd like to base this on prior actuals, which will be the information that comes through from QuickBooks from the same period of last year, or on a percentage increase on prior actuals, in which you'll be able to define a percentage by which you predict your income and outgoings to increase for your next budget period. So once you have created the budget name and defined the period that you'd like it to cover, so you'll then get the option to enter any more information that you'd like to. So any pre-populated information that using the prior actuals will pull through here first, and you can then choose to override any pre-populated expenses in here. So the first box on the left hand side will be the ones that you can use in order to pre-populate across the whole budget. Once you put a number in here, clicking the arrow next to it will give you three options, and here you'll have the choice to populate the budget using the first month's value, like I have in this budget for the director's salary, telephone and accountancy expenses. This tool is particularly useful when you've got items that you're likely to be paying on a consistent monthly direct debit for. So another option that you have is to populate based on a percentage increase on the first month's value. It will then increase by the same percentage month on month, as we can see in the advertising section that we put in here. And the final option will be to increase based on a percentage increase on the existing month's value. In here you'll be able to also have the ability to input manual expenses that may be one-off. For example, we can see the insurance cost of £500 in month 2. Any box that's in the budget can be edited, so if you would like to pre-populate across a whole budget period and then kind of go back to say it's not actually going to be that busy in November, that's completely optional to you as well. I'll now pass over to Abby, who will talk you through an example budget.
Now Tom has shown us how to create a budget, I'm just going to run you through an example. When I created this budget, I initially selected that I wanted a monthly budget and I wanted it to be based on prior year actuals, so then it would pull through the applicable data from QuickBooks. When you're creating your own budget, you'll want to start tailoring the budget to your business operations. In this example here, the monthly sales figure I've adjusted on the basis that the business will be busy in the summer months but quieter in the winter. You will know your own income trends, so you can reflect this in your budget. As a result of this, I've also increased my allowance for cost of sales in line with my expected sales income. Moving down to expenses, it is probably a good place to start checking all your consistent monthly outgoings are as you expect them. For example, for your monthly director salary, you might need to increase this slightly from the prior year to account for the change in tax year and new amount. Then you can make sure the budget includes one-off costs you expect to incur. This might be your insurance bill that you pay annually. This is the case in our example here, where we expect to pay this in December. The budget will help you to address potential problems earlier. For us here, this is a significant outgoing in a quieter sales month, so it might be the case that we look into the option of paying our insurance costs monthly to help with cash flow. I've also increased our advertising costs in the winter months because I know the business always spends more on advertising during the quieter periods. These are just 2 examples, but you can apply this process to all of your business expenses. For the income tax calculation, it is easy to include an estimate of this. I've calculated 19% of the net profit before tax figure in this budget, as this will be enough for your budgeting purposes. We will then also know how much you need to put aside, possibly in a business savings account, to cover your tax liability when it falls due. This takes us to the end of our budget, so once you're happy with your figures, your budget is good to go and you've got a much better idea of what your profit will be for the period.
We hope you enjoyed this video. If you did, subscribe, leave a comment down below. You can also find us on Twitter, LinkedIn, Facebook, Instagram, and quite recently, TikTok. And we'll see you next time. Stay safe.